In terms of vol side of things in crypto, realized vol kind of collapsed back into the mid-20s, which we suspected it would, especially if we stayed in the range. So 10-day realized down here, falling over the course of the week. Implied vols were lower, but to a lesser extent than realized, and that took carry back into the positive territory across both Ethereum, which was trading negative carry, and Bitcoin, which was very small positive, but is now decently positive. So the gamma sellers getting rewarded there with positive carry, and they are having an amazing year, given the low levels of vol, particularly realized vol as well, that we've seen in crypto this year. In terms of major macro catalysts, we're pretty light this week. So the low vol environment is likely to continue in crypto into at least expiry on Friday, I would say. There are some Bitcoin ETF decisions due from the SEC in middle of October. They're not necessarily the kind of final ones, but there is some scope that there might be something positive or incrementally negative to come out of that. I'd say the bigger move is probably going to be on the positive side, if there is one, because if it's negative, it just means they're delaying or they're pushing back, and there'll be a final deadline, later down, maybe early next year. So really, I'd say if you're going to get a proper move on those middle of October catalysts, it's going to be a positive piece of news. Okay, that's my guess. And that will probably ignite some more volatility. But for now, as we wait for that, it looks like theta is very much the option owner's enemy, as it always is. But I'd say I wouldn't pile into too much time decay right now. Okay, in terms of term structure, we have seen the front end continuing to drift as realized vol drags it down. Back end vols are pretty stable, both on Ethereum and Bitcoin, barely moving. So really the front coming down, you can see a bit of a steeper contango forming on Bitcoin. In terms of Ethereum, similar story. We got the front end coming off, but we also had November down pretty hard because we saw a decent block trade go up in November, putting pressure on that part of the curve. So we saw November was actually down the most at 2.5 vols, where the rest of the curve was down closer to 1. And then the back end was slightly bid in Ethereum. But in general, that preference for Vega over Gamma is still very much here. People looking at long-term Vega and saying it's pretty cheap in its range, particularly Ethereum, but we don't want to be paying time decay right now because this thing just is not moving. Okay. Looking at the relative value side, we did see a little bit of a pop back up in in this spread between Ethereum vol and Bitcoin vol, still sitting below zero. Still no one really thinking Ethereum is going to outmove Bitcoin. But like I say, it has popped from the lows that we saw last week. So we've got the front end trading at -2. We've got the middle trading at -5 or 6, with -6 in November expiry being the lowest point of the curve. So I think the realized vol, even though 10-day realized vol is slightly in favor of Ethereum on the short time frames like 10-day, the implied spread is negative across the curve. So option players are basically saying we need to see persistent realized vol in Ethereum above Bitcoin to take this spread back to positive, right? And basically we probably don't see that happen until the BTC ETF decisions are out the way and you get whatever gap type move you're going to get out the way, and then maybe Ethereum can start becoming the story again as people talk about Ethereum ETFs and stuff like that. But for now, the market just isn't buying it. It's not buying the idea that Ethereum is going to move more. Okay. And that's even on the downside. I actually think Ethereum will move more on the downside, but the market is not overly convinced, it seems. Okay. SKEW moving around quite a bit. Failure to build any upside momentum has brought put demand back, and we've taken SKEW back into put premium, particularly in a short part of the curve. So 1 week SKEW is as high as 4 vols for puts. 1 month SKEW on Bitcoin is 1 vol for puts. And beyond that, we go back into call premium with the back end still firmly in a 4.5 vol call premium. Ethereum SKEW, on the other hand, has got put premium in most of the curve. So we've got about a 5 vol put premium in the weeklies. The rest of the curve somewhere between 3 and 4 vols for puts. And then the far long end, 6 months and longer, has a slight call premium of 1 to 2 vols. So there definitely is some element of the market thinking Ethereum's got more downside than Bitcoin has in the SKEW, but the absolute levels of vol still have Ethereum, under Bitcoin vol. All right. Now these quick reversals in short dated SKEW are back towards kind of, it's a consequence of options traders using front end puts, particularly to hedge the downside. So whenever the rally happens and starts to run out momentum, you see a rush for super short dated puts. And that's why you're getting the put premium come back really quickly in the weeklies. Okay. On top of that, you've got consistent supply of upside calls in the kind of 1 week to 1 month area as well, particularly from on-screen players. And that's keeping a lid on the calls. So that's why you keep getting put premium in the front end of the curve. You've got consistent selling of calls that people just harvesting carry out of. And then to play the downside, if the market feels shaky, people are not going to long dated puts, they're just going to short dated generally. Okay, so that's why we're very quick to mean revert back. Whenever we go into a call skew, it doesn't take long for us to flip back into a put skew. Okay, in general, skew is just super volatile in crypto and very spot sensitive. So Bitcoin's back in the middle of the range. So it says buy vol because vol's so cheap, but the carry's positive, so I wouldn't necessarily rush into that. Maybe buy some vol just before those big meetings in the middle of October, but I don't think you want to rush right now. And then Ethereum actually is a bit more beaten up, so it's saying buy calls on the strategy compass. Again, not rushing to do that. I think you've got to be patient with this thing. It's kind of telling you that it's kind of putting premium on the fire right now if you're going to start buying too many options. Okay. In terms of flows, volumes did tick up a little bit. Obviously, we're approaching a big quarterly expiry this Friday. Something like $5 billion notional worth of options expiring in both Ethereum and Bitcoin. I think the total is 5 billion. The general flows we saw in Bitcoin was rolling of exposure. So big clips were rolling the 24K puts from September to 13th of October. We saw October calls, 30K and 32K getting rolled into November. So people just extending the life of their premium a little bit. And then we saw some March 24 upside printing as well, all those purple bars there, which was kind of a mixture of call flies, call spreads, things like that. But in general, we do think it makes sense to roll premium out if markets look stuck in a range. You want to keep your premium alive for a little bit longer. Then it tends to be a sensible thing to do. We did something similar, which we'll talk about in a minute. So Ethereum options volume in line with BTC, a little bit of an uptick there. The big clip really was these 27th of October, 1,900 calls. They got bought back in decent size in like 60K options. The flow was counteracted though by big on-screen selling. So we had about 50,000 options sold in the 1,600 and 1,700 calls. So really lots of supply of vol still there. So not that buyer of those Octobers didn't really have any market impact, and we actually did see vol lower on the week. And then November calls getting sold as well in that 1,800 strike. That's what put pressure on the November part of the curve and took it down 2.5 vol points. Put protection did also get bought though, in the kind of 29th of September. So that's these purple bars here. The 1550 puts getting bought, just trying to opportunistically play for a little bit of a breakdown as spot price action didn't look too rosy. Okay, so that's your flows. In terms of gamma positioning, both ETH and Bitcoin they were diverging last week. They're kind of moving back towards neutral this week. So you've got Bitcoin sitting pretty much at flat here. Looking at where the strikes are, we've got a big 27K strike for 29th for this Friday. That's counteracted by some smaller shorts more locally. So as we go into Friday, if we do drift lower, we're probably going to go into a small short gamma position, but we don't think it's necessarily going to be that big. We were a pretty short gamma last week, and the volatility was still calm. So we don't necessarily think that this Bitcoin gamma position is quite big enough to have any real material impact here. Okay, the dealer positioning in ETH though was quite long, dropped down for expiry, and is now sort of half of what it was before. So it is still net long, but we have seen some put buyers come in, which has kind of neutralized it a bit. So you can see dealers are actually short these 1550, 1600 for Friday. They are long some Octobers, some Friday, and some end of October stuff in the higher strikes around sort of 1650 and 1700. So net, still net long, but you can see there was a little pocket of short gamma on the downside that may grow into expiry on Friday. But overall, dealers are still pretty, holding inventory in that 1700 area. Okay. If ETH does break lower, we could see the gamma flip to negative briefly, and that might help fuel a bigger move down. Like we said, we do think you're going to get more volatility on the downside if you do get volatility in Ethereum, and the gamma positioning would back that up as well. Okay, that is your positioning setup. So what have I been doing? That's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.